We had a debate this week, which gave us some sort of a peek into the economic plans of Kamala Harris, the vice president on one hand, and the former president, Donald Trump, on the other. What did we learn from it?
So we learned a few things. We learned who Kamala Harris was on a broad basis. Those who know her well and those who know her well in the business community know who she is. They expected her to do what she did last night, which was to be presidential, authoritative, approachable, well-rounded on the issues, and disciplined. And I think it played as a big contrast, obviously, to former President Trump talking about dogs and the like. But most importantly, I got an email immediately last night from a Fortune, we call S&P 100 CEO, who had met her but was on the fence. And he said, boy, this is really dispositive to me. She knows how to lead.
So let's talk about the plan specifically. I mean, atmospherics really count in an election, as we know, but also it counts what these people plan to do. You're in a particular position to understand what the vice president might plan to do in economic policy. You work with her and her team fairly regularly. Give us a sense of exactly how she would address the middle class, because that's the way she started in the debate. I really care about the middle class. What is she proposing that would actually make a difference for the middle class?
One, anybody under 400,000 or less will actually see lower taxes. Two, if you're looking for a new home, you'll get a $25,000 credit, and state and local communities will have incentives to build more quickly, cut through red tape, and make it more affordable. Three, she looks at the middle class and says it's not enough for health care to have insulin go down to $35. You need lower health care costs more generally. And very importantly, David, you start thinking about what she wants to do on the innovation economy. How do you help middle class families do well? You support them in building businesses. The idea that she wants to see 25 million new applications during 4 years as presidency is a big deal. And she's raised the deductibility to $50,000 in terms of expenses. She's making it so that if you have an idea, if you have an opportunity, she wants to help you. And most importantly also, or as importantly, she's looking at skills-based jobs, not just college-based jobs. And she wants to see a lot of private-public partnership do that. And then in terms of the middle class, again, she's done nearly $1 trillion of public-private partnerships across the country. And that money is spent in communities, whether it's CHIPS up in Syracuse, New York, Arizona, Ohio. Those are all creating great jobs for the middle class.
There's no such thing as a free lunch. As you go through those programs, there are price tags, substantial price tags attached to each and every one of them. How is she going to pay for it if she can get them done?
So she is incredibly focused on fiscal discipline, but she's doing it in a way that is everybody pays their fair share, but not necessarily punitively. So the highest tax bracket goes to 39.6%. We've been there before. Cap gains, 28%. We've been there before. Ronald Reagan was at 28%. Billionaire tax. What she's telling you is she will figure out responsibly how billionaires pay their fair share. And I say responsibly, you have to pay attention to what she says about her plans versus what she doesn't say. And there's a lot in the Biden-Harris platform, like unrealized gains, that doesn't mean that's where the candidate is. She's going to look at everything and say, how can we raise that kind of revenue? She looks at buybacks. Right now, stock buybacks are 1%. There has been zero difference in impact on buybacks. In fact, 2023 was the largest amount of buybacks by companies ever. That goes from 1% to 4%. So she's highly focused on it. And she looks at the Trump plan and she says that's upwards between $4 trillion to $5 trillion of increased debt on top of the $8 trillion of debt that was created during his first term. So she's very focused on the pay-fors, very.
So the people who would be paying more money are a lot of those people who are emailing you after the debate. They are in that top tax bracket. They're running companies that will be affected. Why should Wall Street support Kamala Harris, given her emphasis on the middle class and taking the money from some of the more wealthy?
Okay, so let's put to bed something that people simply don't understand. The markets have done better under Democratic presidencies over the past 50 years than Republican presidencies. The third year of the Biden administration, which means no COVID impact, versus the third year of the Trump administration, which means no COVID impact, higher GDP, more jobs, better market performance. The CEO, he or she wants stability, wants a free market-based economy, does not want to be sitting here with 10 and 20% tariffs across the board, which is upwards of 1% hit to GDP, 700,000 jobs. They want support from the public sector in a way that helps their business. If they know with certainty what the environment's going to look like, it helps them. And I also do think the signaling matters. When the VP talks about business, she talks about small business, which has been a big focus of hers for a long time. She talks about the entrepreneurial business, the startup community, and she talks about big business, that we're all in here together, aligned to figure out how to grow the economy for broad-based growth, again, back to the middle class. And I think most CEOs understand that.
Let's go to the other side, that is the Donald Trump. I'm not going to ask you to defend his position, but in fairness,
that would be hard.
Well, but in fairness to him, he says one of the ways he's going to address that deficit and that debt is with tariffs. And put aside the fact that that really comes from consumers and is in fact a form of taxation. Why is that not a way to actually retire some debt and deficit? Now, it is a tax. You know, he doesn't call it a tax, but it is on the U.S. consumer. But it is a way of retiring debt and deficit. Why is that wrong?
Because quite simply, if you have tariffs, you're hitting GDP. His 10% hits GDP, perhaps, as several economists said, 1% hit. If he does 20, because he's been saying between 10 and 20, it's a 2% hit. At 1%, jobs, $750,000 jobs at risk. At 2%, 1.5 million jobs. That obviously has a big hampering effect on the economy. In addition, the tax to consumer is real. And if you think about 20%, he's almost at $1 trillion of tax to the consumer. That does not go, David, to defending the deficit. The deficit needs money coming into the system. That's the deficit. It's not money hurting the pocket of the consumer.
One way that we cover this election is by talking about a so-called Trump trade. We try to take a look at certain equities, certain prices and movement. Even after the debate, there was talk about whether the Trump trade has come off a little bit. Is that a myth? Is there a group of assets, equities or otherwise, that would do relatively better under a President Trump, second President Trump, or do relatively better under President Harris?
Great question. I actually think that most securities trade on so many different factors and so many micro and macro factors, David, that the idea that either president could have an outsized impact, I don't see it. I see that in any presidency, companies will either grow or not grow. They've grown very well during the Biden presidency. There's been a good economy, but they've grown well in other different presidencies as well. So I think it's much more about short-term impact when you talk about the president trade. And when people think long-term, they'll see the markets have done well, depending on the year, with Democrats, and obviously it's done well with Republicans, depending on the year. I think what's more important, around, other than the trade, is to say, what will a company think about in terms of the investments it wants to make, whether it's a 1-year, 5-year, 10-year investment or beyond, based on what they see from one president versus the other. It's the investment, and the investment in the country and the investment in people's businesses that you want to encourage. And I'd be much more focused on that than what the short-term trading aspect is of any particular asset.